focus on what matters.
Welcome to the Future of Personal Finance virtual event. I'm Hope King, business reporter at Axios. I'm coming to you from New York, New York. Welcome to our audiences on Facebook, YouTube, Twitter, LinkedIn, and on Axios.com. Join the conversation today on Twitter with @Axios and hashtag Axios Events. Over the next 30 minutes, I'll be joined by my colleague, Dan Primack. We'll be discussing how financial education is gaining traction as Americans try to establish some more economic certainty following the pandemic. Our first guest is the Senator from Michigan, Senator Gary Peters, joining us from Washington, D.C. Hello, Senator.
Great to be with you, Hope. Hope all is well with you.
And you as well. Senator Peters, you introduced bipartisan legislation with your colleagues from Wyoming about this Piggy Bank Act. It's an acronym for legislation aimed at improving financial literacy for high school students. What exactly does that entail?
Well, it really focuses on the need for folks coming out of high school to have some basic financial literacy skills. Clearly, it's a big time in their life as they leave high school. Either they go into employment or even going to college, they're going to take on increased financial responsibilities and obligations. And it's really important that students understand what those decisions entail and the consequences for those decisions. And what we find is that, unfortunately, financial illiteracy is very large in this country. Well over half of adults are considered financially illiterate. And that ends up costing them an awful lot of money over the course of their life. It can cost cause all sorts of problems as well. And it's particularly a problem for people starting out as they're getting their first credit cards or getting their first job, signing up for student loans, whatever it may be. It is critically important for people to understand how this financial system works. And we find that it is a particular challenge for folks in low-income areas or areas that are underserved by banks, so basically underbanked communities. And in those communities, people look to sources outside of the banking system for loans. There can be payday lenders and others which charge very high interest rates. And people just need to be better informed as to how to use those financial vehicles. So the focus of this legislation is to ensure that young people graduating from high school are learning basic skills necessary for them to be successful, both right out of school as well as through adulthood.
I think you would find many parents agreeing with you. And I guess the question really is, why start with high school? Why not start sooner?
Well, high school is a time that people are getting closer to making those decisions. And the literature that I've read from folks who study how giving financial information, how effective it is with people, they find two things. One, it's best that you get that education closer to when you actually need to use it. And it's kind of like that, the old adage, if you're not using it, you lose it. You'll forget about what you learned in a financial literacy course by the time years later, when you're actually taking out a mortgage or a student loan or getting your first credit card. So having it closer to that time is important. Clearly, financial literacy is important all through adulthood, and there are other courses and other programs that should be in place to help people make informed decisions. But it's important to do it close to when you're going to use it. And part of this program is also the opening up an account and depositing $300 into that account for an individual as they're in these financial literacy courses, because then it's become real right away. They have actual money that has been put into an account. That changes people's framework pretty dramatically as to how they think about this, because now it's real. It's not just something that they're reading in a textbook or a teacher droning on in a lecture. This is something they can actually see tangible that's in their account. So put those two factors together. High school is a great place for this work to be done.
So you mentioned this $300 initial deposit, and then there's also a monthly $25 matching funds. How is this program going to be funded?
Well, this will be funded through the federal government in a grant program. It's a pilot program. So states are going to put together programs, and if they would like to pilot this in some of their school districts, put together a program and then compete for a competitive grant for this money. I think we're going to get a lot of innovative programs from states across the country that'll think really thoughtfully about how do we best convey financial literacy information to high school students. And in the program, you have to put together a course. So those states or those school districts that want to be in this program will have to develop a curriculum as to what they're going to teach those students, how they're going to teach those students, and how they integrate the fact that those students will actually have an account for $300 that they can have. They can't take it out till after a year after they've graduated from high school, or if they are using it for college tuition, other things that they can use that money for. But they'll have that. But the other key part of this is there's actually a matching for a monthly match up to $25 a month. So if those students start saving and adding to that account by saving $25 a month, they actually get a match up to the first $25. And it's clear when folks are offered that kind of incentive and match, they tend to learn their lessons very well. And this will be an opportunity for us to really make sure young people are starting out on the right foot as they graduate from high school and are making some very big financial decisions.
Right. And again, I don't think many people would disagree with the importance of teaching everyone the importance of managing their money. Critics, however, would argue with the how we do this part of the equation. In large part, financial services, these banks, they have been funding a lot of these literacy programs, as my colleague Felix Salmon has reported. And, the education has been created really by these companies, which students really, should learn more about as well. How is the Piggy Bank Act different from some of the corporate sponsored literacy programs out there for financial literacy?
Well, I just think it allows more schools to actually do this. I certainly applaud the financial industry for getting involved in financial literacy. I spent 20 plus years as a financial advisor. I come from the industry, and I understand how important it is that we teach financial literacy to all Americans, and certainly applaud those private efforts. But if it's good for those schools, it should be good for other schools as well. How do we give as many students as possible, particularly in our low-income areas and those areas that are underbanked, the opportunity to get this education? And so I'm of the school: the more students that learn, the better. Let's not put any artificial barriers in the way of students who could really benefit from this.
Would banks play a role in this?
In this program, it's possible. Certainly, this is a grant program working with state programs that's will put together in their local school district. So I could certainly see and would welcome and would think it would be good to also partner with private financial services industry as well. And I'm sure they would find a number of willing partners, and working together, they will be able to expand the reach and help even more students in their respective states.
What do you think we've learned during the pandemic that might be taught through the curriculum? You've introduced this legislation, at the inflection point really of our economy here during the recovery.
Well, certainly, as we were in the pandemic and going through this, we understand that a lot of folks faced a really significant financial insecurity, particularly folks in many of the areas that are going to be addressed through this. And folks who were in the lower income categories were impacted disproportionately in the pandemic. Folks at very high income, actually, if you look at the studies, many of them have fared quite well financially, but other folks have been hit very hard. And that's what the focus of this program is to help people in those areas with lower income to understand how managing their money is absolutely critical, and give them the tools that they need in order to manage that money effectively.
Now, lastly, I want to ask about the current housing market. First-time home buyers are finding it more unaffordable for them to get in. What are some of the resources that folks who are looking to make their first purchase should look toward, given your background?
Well, certainly housing is a major problem, and it's gotten a bigger problem with what we've seen after the pandemic, and housing prices go up dramatically. Right now, we are working on a number of housing programs to assist folks either purchase homes or make their rent more affordable. And that is part of actually future legislation that's being debated right now in the United States Senate and House. And hopefully we will be able to pass a number of provisions shortly that will help Americans all across the country.
Senator Peters, thank you so much for joining Axios.
Good to be with you. Thank you.
And next, we have a view from the top segment with my colleague, CEO and co-founder of Axios, Jim Vandehei.
Thank you very much, Hope. I'm Jim Vandehei, CEO of Axios. It's now my pleasure to bring you a conversation with Doug Shulman, the CEO and chairman of OneMain Financial, the sponsor of today's conversation. Thanks for being here, Doug.
Thanks for having me, Jim.
Doug, tell me a little bit about OneMain Financial for anybody who's tuning in who might not be familiar with your company.
Yeah, look, we are the world's or the country's largest responsible lender. Our mission is to improve the financial well-being of hardworking Americans, which is a great mission. We occupy the space that a lot of banks have pulled out of. We have 1,500 branches around the country, so we're in communities, rural, suburban, and urban. And what we do is we help people with everyday needs through lending products, through credit cards, through financial education and wellness programs that we have. We started as a branch-based lender, helping people with their everyday needs, like a hot water heater breaks or your car breaks down and you don't have access to credit. And so we still do that, where we make loans to people who often have a hard time getting loans from others. And we do it 90% of the time at the lowest rate they can get. But we also really are focused on our customer success. So we do a personalized budget with every one of our customers. It's a consultative process. And then once we give people access to credit who often don't have other access to credit, we work with them to improve their financial well-being, whether it's through saving money on bills, improving their credit, getting their other credit under control.
Let's step back for 1 second. When you say financial well-being, what do you mean by that?
Yeah, look, when I think about financial well-being, I kind of think of it in two ways. One is, 40% of people in this country don't have $400 in savings for an emergency. So the first thing people need is access to credit when they have something come up and they need money. But we're very focused as an institution on not just giving anyone access to credit, putting people in lending products that they can afford is really important. Doing a budget with people is super important, which is both helpful to make sure they can afford to repay any lending we do with them, but also gives them a sense of their finances and a way to manage their finances. And then, we have a company called Trim that's part of OneMain that negotiates bills for people and monitors subscriptions. We have financial literacy and education to help with, whether it's bills or investments or college. And so I think of it as, financial health starts, or financial well-being starts with having the money you need for the things you need for your everyday life. But then it moves to, how do you manage your money responsibly? How do you get more access to credit, build your credit profile, live within your budget so you can kind of move up that financial ladder?
When we talk about well-being in terms of health or financial well-being, it sometimes feels like it's the providence of people who have money and who have time to think about it. I'll put a real-world face on this. I got a call the other day from somebody who does has helped me out in rural Maine. And he has no credit, has no money. I don't think you guys have a thing there. But in terms of, he was asking, like, what do? I don't have a credit score. I have 2 kids I got to take care of, and I just got to do my job. How do you help people who might not be super rich or super fluent in finances?
Yeah, look, our average customer has $40,000 or $50,000. Usually has been at their job for a certain period of time. Half of them are homeowners. It's really working Americans. And just as an aside, Jim, I grew up, went to public high school in Ohio, started Teach for America, was one of the co-founders, ran the IRS, was a financial regulator. So I've been operating in this realm of how do you make communities more secure, safer, thrive over time. That's the niche we fill, the guy in Maine that you just described. Often they can't get a loan from a bank. We can give someone usually a loan if they have some credit score. Our average loans are $8,000 to $10,000, but we also now have credit card products. So even if you don't have much credit, we might give you an open line of credit. If you pay us 6 times on time, we'll then increase the credit. And so we usually have a product for people that a bank won't serve. And we're this very important niche. We actually come out of bank roots. We spun out of Citigroup a bunch of years ago. It's often there's banks or there's payday lenders, and we fill this important, responsible niche in between.
That's fascinating. And the fact that you've had the experience sounds like what you did at the IRS, what you've done in the private sector informed this. How does the business model work? Like if you're serving the communities that often people either want to exploit or don't want to deal with, how does that work as a business?
As a business, it's a typical lending business where we get access to capital from, we borrow money in the capital markets and we lend money out. What we do differently, though, than a lot of businesses is we put a lot of money into being available to our customers however they want to be served. And so a lot of people have shut down their branches. We actually have real live people who live in the community who are going to see people on the street or at church, or in the grocery store. And so we develop relationships with people in the communities. Often we have relationships, across families. And so the business model is relatively simple. We provide credit to people. They pay us back. We have a very high repayment rate on our credit. But the important thing is we then invest in doing budgeting with people, helping people work through bills. If people get into trouble, we actually, have plans and we give them a break. During the pandemic and during 2020, of our almost 2.5 million customers, 500,000 of them had some issue paying at some point. And, we said, don't pay us for a month or modify your loan. And so, our whole business model is we're there for people in good times and bad. We fill this really important niche in the community. We invest in our people, but our customers. We just launched financial literacy programs in high schools. We launched the first social bond in credit insecure communities as defined by the Federal Reserve, where 75% of our loans are going to women or minorities. And so we've got this super cool business model where we're a lending company to non-prime consumers. We're there for them to provide access to credit, but we do a lot of things after that to really help people along their financial journey.
Doug, thank you for a fascinating conversation. Thank you to One Main Financial for making this broader conversation possible today. And look forward to seeing you again, Doug.
Thanks a lot, Jim. It was good talking to you.
You too. And over to you, Dan.
Thank you, Jim. I'm Dan Primack, business editor at Axios, and our final guest today is the co-founder of Financial Literacy for All and the founder and CEO of Operation Hope, John Hope Bryant. Hi, John.
Honored to be with you. Glad to be with another organization that has a Bill of Rights, meaning Axios and Operation Hope. So fantastic.
So, John, you've devoted your career, your life to this idea of financial literacy. Kind of in a smart brevity standpoint, what does financial literacy mean to you and to Operation Hope?
It's freedom. I mean, having money and generational wealth gives you freedom in your life. For America, it's the fulfillment of its promise of opportunity for all. I really believe if Dr. King was alive today, this would be the work he'd be doing. This is the work he was pivoting toward when he was assassinated in 1968, the Poor People's Campaign. This is the work that Abraham Lincoln was trying to do when he was assassinated, when he created the Freedmen's Bank to teach freed slaves about money. And it's 1865. So this experiment of moving from democracy to economics, or democracy assisted by economics, is the American story in many ways. Here's the other side of it. In 2020, 64% of Americans before 2020 didn't have $400 for an unplanned event. During 2020, companies like Delta Airlines, one of the members of Financial Literacy for All, had their employees experience $1 billion in emergency 401k loan withdrawals. $1 billion from one company. Imagine all the other companies in this country. This is almost like a silent issue that no one's talking about. This is one company that had $1 billion withdrawn in emergency loans. There was no picketing. There was no grand statement. There was no lines in HR. It was just folks in computers at midnight, traumatized. You have 41% of African Americans who own a home, in comparison to 70% of their mainstream counterparts. This hurts America. 13% of African Americans are in the stock market. It's either 13 or 18%, but it's in the teens. This hurts America GDP. So I think there's 2 to 3% of untapped GDP, gross domestic product, that's locked in at the bottom of the economic pyramid of all races of people. So if you can just help folks who make $60,000 a year or less to tap their potential and solve some of their problems, which is forcing them, Dan, to live in a survival mindset, which, by the way, hurts politics, hurts economics, hurts hurts everything that's tied to American promise and prosperity. If you can help folks get out of a poverty mindset or a surviving mindset, move to a thriving middle class mindset or a winning building mindset, all boats rise, everybody wins. So I really see this as a business issue for the nation. I see this as a business issue for business, which is why I believe it's going to work this time at scale.
John, can I ask, you've talked the way you're talking, we've heard a lot over the past couple of years, maybe even going back to the financial crisis, but certainly over the past few years, about a lot of people who feel that that concept of the American dream is, if not dead, is certainly on life support. It sounds to me like you don't believe that. You believe it's there, but it's a question of access and education.
Correct. The latter is broken. It's what people don't know that they don't know that's killing them, but they think they know. There's an old Southern saying, Dan, no matter how much I love you, my son or my daughter, if I don't have wisdom, I can only give you my ignorance. So out of love, we pass down bad habits from generation to generation. Or said a different way, if I hang around 9 broke people, I'll be the 10th. So why does everybody in my neighborhood want to be a rap star, an athlete, or God forbid, a drug dealer growing up? Because those are the models that they saw growing up. We model what we see. Why are poor white neighborhoods in rural America suffering and struggling with no opportunity? Because they don't see doctors, lawyers, entrepreneurs, business people in their neighborhoods. So when you have let's get statistical here, because I love math. Dan doesn't have an opinion. Half of African Americans have a credit score below 640. Everybody in the country, half of everybody in the country, all blacks, of all races. That means you got half of Black America locked out of the free enterprises. It's not like we screwed something up. So we just never got the memo on money. So John, at Operation Hope, we're moving credit scores 54 points in 6 months, 120 points in 24 months, and nothing changes your life more than God or love than moving your credit score 120 points. That's material. That's significant, and that unlocks. All right. Conversely, George Floyd, God rest his soul, was murdered in a 500 credit score neighborhood. All the murder, mayhem, drugs, the problems we see in our neighborhoods across this country, Black and brown, urban, white, rural, are in these same neighborhoods where you see a check casher next to a payday loan lender, next to a rent-to-own store, next to a title lender, next to a liquor store, next to a pawn shop, and a church down the street trying to make you feel a little bit better. I think that this is hope for America when we look at it this way, because maybe you can't fix the red and blue crisis or the Black and white crisis, but you can fix the green crisis. And I think when you do that, you actually affect positively the other purported crisis in this country. So yes, I do believe, I am very hopeful. And I think this is about repairing the ladder and unlocking the system and connecting education to aspiration by giving kids a reason to want to go to school and college and graduate, and giving adults a reason to re-educate, reimagine, and get re-skilled like we did after World War II with the Marshall Plan, by the way, which created the white middle class in this country.
So, John, can we talk tactically? When we talk the word financial literacy, literacy is really education. In terms of specifics, what do you think are the one or two most important things that people should learn, or lots of people should learn, that you feel they're currently financially illiterate about?
Well, I think that from Financial Literacy for All, which the CEO of Walmart and I are co-chairing, we are going after corporate America first and saying 5 things. We're saying the CEO must commit at the top, so everybody knows, it's serious. It's a business issue, not a community affairs issue only. Number 2, that they need to embed this in their business plan. Embed it in their business plan, like healthcare was 20 years ago. Health wellness was 10 years ago. The right vote was 50 years ago.
Be embedded? But John, what needs to be embedded? What's the thing that say, whether it be Walmart or Delta or any of these companies, need to impart? What piece of information or type of information should they impart to their employees?
Yeah, so it's like financial coaching. So it's literally helping somebody to resolve the errors on their credit report, literally helping someone to get, here's an example for the individual watching, they earn income tax credit. So if you make $60,000 a year in this country and you work, so you're not lazy, the government owes you a check. So if you're watching this and you know somebody who makes $60,000 a year and you say, what's EITC? Congratulations, Dan and Axios just got you paid because there's a check coming to you. If you make $35,000 a year and you are a teacher in a small town or something, you're probably owed, and you have 3 children, you're owed by the federal government from working about $6,000, Dan. If you don't know what I'm talking about, you've probably never filed. It's retroactive for 3 years, Dan. That's simple math. I mean, that's almost $20,000, and between $5,000 and $6,000, $20,000. And if you get that plus the money in the stimulus bill for the credit for each child, the tax credit, that's $3,000 per child. Washington's program just got you basically double your income almost between $25,000 and $28,000 in support. That's real financial literacy awareness and education made real in your life.
John, can I ask, the way you've done Operation Hope, you talked about how you've teamed with Doug McMillon, the CEO of Walmart, and you talk about how you guys are doing this through businesses first. There's obviously a critique, which is that a lot of these businesses, big businesses, pay so little, or on average so little, that it is something that is harming people economically. It's one of the reasons why a lot of people are under $60,000 is because they're being paid under $60,000 from these companies. How do you reconcile those two things?
We're finding that companies are getting holistic enlightenment, not partial enlightenment. You see the same companies who embrace this are also giving their employees what I call a living wage. Forget a minimum wage. They're paying their companies. B of A, who's a member of our coalition, went from 15 to 18 to 20. I think Doug McMillon just went to $18 an hour, and now B of A's gone to 20. They now said they want to do $1 a year up to 25. So they're going to do $1 a year to 2025, which is $25 an hour for all employees. So I think that you're got, and then Delta Airlines doing profit sharing at the top and financial coaching at the bottom. So no ceiling. As the company does better, you do better, which I think is even an upgrade on what I call the union model. So now labor and management are aligned versus in conflict with each other, so you can grow. And then in tough times, there's a mattress, a cushion, financial coaching, which we provide, which allows people to have dignity in the midst of their challenges and their problems. So these companies are not perfect, but they are signaling that this issue of what I call social justice through an economic lens is a new reality for business, that employees, and they're finding, by the way, it's easier to get employees this time because employees want to know that their employer stands for something. So all this stuff, I believe, this is a change, Dan, a systemic, permanent change where all boats rise when you invest in your own people.
John Hope Bryant, thank you so much for joining us.
My honor.
Thank you all for joining this afternoon for another virtual conversation that's made us all smarter, faster. For more information or to sign up for the Pro Rata, Markets, or Closer newsletters, please visit axios.com/newsletters or the Axios app. Thanks for joining. We'll see you at axios.com.